Today we'll be working on finishing up Chapter 4, Problem 5B. We're going to do closing entries and we're going to prepare a post-closing trial balance. And so I'm going to share my screen with you. What I've done is I've made up an Excel spreadsheet to help you understand what's going on with this particular problem. And so what I'm showing you here on the screen is the adjusted trial balance that you would have completed in the last step that you did in this particular problem. The adjusted trial balance comes after you have posted your adjusting entries to the journal. You'll prepare this adjusted trial balance. And then you would prepare your financial statements. And we did that in a previous video. So once your financial statements are prepared, then what we're going to do is we're going to create our closing entries. The closing entries are the entries that we will use to reduce our revenue and our expense and our drawing account down to zero so that we can get ready to start a new accounting period with no balances in those accounts. And the revenue and the expense accounts and the drawing accounts are what we call temporary accounts. And so I've defined that for you here. And we're going to take those accounts and create closing entries from them. Now there's several places where you could go to get the information to prepare you to record your closing entries. You could get the information from your income statement or your statement of owner's equity. You could get the information from your adjusted trial balance, which I've got for you here. Or you could get the information from your ledger. And I also copied the ledger down here for you too. So there's several different places that you can get the information to prepare your closing entries. And what I'm going to demonstrate to you today is how the closing entries would be placed into T accounts as tools to help us to get ready to be able to journalize these closing entries. So we're going to close out our temporary accounts starting with revenues first. We only had one revenue account in this particular problem. So on our adjusted trial balance, we can find the revenue amount. Our revenue account is fees earned, and the amount is $64,550. You'll notice that I've entered that in my T account on the credit side because fees earned increases on the credit side and its normal balance is on the credit side. And it should have a credit balance in it before it is closed. Now, when we close this account, what we're going to do is we're going to force this account balance of $64,550 to equal zero. So we simply debit the amount of $64,550 to close it. You see, I've got a notation there to show you that that's closed. And our debits will now equal our credits, which means the balance of this fees earned account will be zero now. So I've got a debit to my fees earned. And if you want to, you could go ahead and put that debit in the journal. This is my example of a journal here. The date that we prepare closing entries is always the last day of the accounting period. And for this problem, it was April the 30th. Notice that I've got fees earned here. I've got a place for my post reference, and I've got a place for my debit. My debit will come from the debit that I used to close my T account fees earned. So I'm just going to enter that in on my debit side. Now this is the only time that fees earned really should be debited. If you've debited fees earned, it's usually because you've made a mistake, which we're not going to be doing, or you're in the closing process, which we're finally in that closing process. So this debit will go into the journal. Notice I skipped over my post reference. We will be posting these closing entries to the formal ledger, which I've got below here. Right here's my formal ledger. And I guess I should have told you that that was a ledger, but you're going to see that I've got the cash account there and accounts receivable. This is my ledger here. So I'm just going to type in ledger here so you'll know that that's what this is. This is my ledger that I've got followed here. And so when you post to the ledger, you're going to have to enter in the post reference, which will be the account number for the ledger. We're not ready to post yet because I haven't finished preparing my first closing entry, which is to close out your revenue accounts. And since there was one of them, I just closed it out. And now I have to close out my expense accounts. So again, my expense account, my adjusted trial balance amount was $35.75. This is where I got that amount, and I just plugged it in there. I need to close my expense account. To close the expense account, I would have to credit this for $35.75, and this is what I would use to close this account. And then I would take this amount and I would put it into my journal. Notice I've got salaries expense after I've written down the capital, and I'll come back to that in just a minute when we get to the capital account. So $35.75 is going to go into my salaries expense account that I'm going to close out here. And so we're going to move on to the supplies expense account, and we're going to close it. And supplies expense has a balance in our ledger at $2,800 right now. That's the adjusted trial balance amount. We want to force this to equal zero because we want to close this account. To close it, I've got to credit it for $2,800. This is to close it. And then what you'll end up with is a zero balance in your supplies expense. And you also would end up with a zero balance in that salary expense. Both a debit and a credit kind of cancel each other out, so there's no balance here anymore. We've got to pick up the credit to the supplies expense and copy it into my journal. And then we will close the rent expense account out. And you can see I've already written in the adjusted trial balance amount. So you just close it by crediting the expense account, which will reduce it, or it'll close it out. It'll reduce that expense account once it is closed to zero. And remember that the T accounts just represent your ledger accounts. These are just tools that help us in the process of creating our formal journal entries. So depreciation expense is the next expense that would need to be closed. Insurance expense. Would be closed. Our miscellaneous expense would be closed. And if you were to balance this, if you were to add up your debits and your credits in your journal now, they would not balance. And there's a reason for that. And that's because the difference between your revenue and your expenses will be net income. And the net income amount would be added to the capital balance. So here's my T account. Let's see if I've got, let me look at the capital balance down here for a minute. Okay, so on my capital account balance, I've got 50,000 in as my beginning balance. So I didn't put that in before, and this can also come from your adjusted trial balance. So I'm just going to stick that in the T accounts. Now, class, I realize they did not ask you in the instructions to do T accounts, but I just think it helps to explain what we're putting here. At least I hope it does. All right. The net income amount would be what you had on your income statement. So when you're doing your problem, the net income will be increasing the capital account. So we'd have a place here for net income. And I remember that it was net income, but unfortunately, class, I don't have that pulled up for you. So I'm gonna have to figure my net income up right quick here. So what I'm going to do is I'm going to make me a formula here to calculate net income. So just bear with me for just a second. I'm going to take my fees earned, which was the total of the revenue, and I'm going to subtract out, you would subtract out the total of your expenses, but I don't know what those are. So I'm going to just make me a formula where I subtract out each one of these expenses. And again, this should be on your income statement, so you don't have to do this. But right now, I don't know what the amount of the net income is. So I'm going to see if that's 53,775. Now notice that I'm putting it in where I'm crediting my capital account because my net income will increase my capital account. So this 53,775 needs to go here. And let me double check to make sure that is correct. And a way that we could do that is we could add up all these credits and they have to equal the debit. Again, you don't have to do this, but I'm going to see. Okay, I didn't do that right, I'm sorry. Oh yes, I did. I added up all of my credits and this amount equals this debit. So I know that this amount is correct here. And that's just something that I did just to check to make sure that I had everything in there correctly for my net income. But this is my net income amount here. And so I had to find it because I don't have it in front of me. Now, you won't have to do that on your problem. You'll just look at your income statement. And if it's net income, it's going to add to the capital. Now, the net income amount has to be put in the journal so that when we post this to the ledger, our ledger account will reflect that we had net income for the period. This is our first closing entry. There are always two closing entries that you prepare. The second closing entry will be to reduce your drawing account to zero. Remember, we closed out our revenues and all of our expense accounts. Now it's time to close out the drawing account. The drawing account, from the trial balance, we can see that the drawing account has in it 18,000. So I'm gonna put 18,000 here on the debit side because drawing has a normal balance on the debit side. It increases on the debit side. And to close this, I would have to credit this account for 18,000. And that will close out the drawing account. That means that this account will end up with a zero balance here. And you notice that I credited my drawing for 18,000, but in our journal, we always have to put our debits first. And so what we need to understand is that withdrawals take away from capital. So my withdrawal will debit the capital account. So in the capital account, I'm going to debit it for the amount that I closed out my drawing, which was 18,000. So my capital account has to be reduced by debiting it for 18,000. And this is how you would create your closing entry for your drawing. You reduce your drawing account to zero, and then your capital account is also reduced. Now, your capital account is not closed. Notice that this capital account will have an ending balance. Your ending balance is what is on your statement of owner's equity. And again, because I don't have a statement of owner's equity in front of me, I'm going to figure this up for you. So our beginning capital plus our net income minus our withdrawals will leave you with the ending balance in the capital account. And if you look at your statement of owner's equity, that should match up there. So to close out accounts, we close temporary accounts. And your temporary accounts are your revenues and your expenses and your drawing. Capital is never closed. It's a permanent account. Well, I say never, but if you're going out of business, we're going to zero it out when you decide that you want to end your business operations forever. You can zero it out at that point in time. But while you're in business, your capital account is always going to be permanent. Now, what you should do once you have these entries in the journal, we're going to post them to our ledger. So I'm going to look for my fees earned account. And by the way, this journal is page 4. This journal is going to be page 4. We need to know that. I'm going to go to my fees earned account and I'm going to debit it in the ledger. So I'm going to look for my fees earned. This is my ledger here, showing up in green. Notice there's a place for the closing entry. I'm going to put my page number, which is 4 in my post reference. And I'm going to debit this account. Notice it's the only time that it's debited for the total amount that is in the fees earned account, which was $64,550. If you forget, it's that ending balance that we want to zero out here, so that once you have closed the fees earned account, your credit balance now will have a zero balance here. So this is your closing entry. You debited your fees earned for $64,550. I'm going to pick up my account number 41, and I'm going to put it in my post reference column. The next account I'm going to look at is my capital account. Notice my capital account is credited for this $53,775 net income. So I'm going to go to my capital account. I'm going to put in the page number, which was page number 4. I'm going to credit my capital. Remember that we credited our capital in the journal for $53,775. I'm going to credit my capital for $53,775. And what that's going to do, because this is net income, it's going to add to my previous credit balance. So I'm going to take my previous credit balance and I'm going to add to it the credit for the net income. My net income adds to it. So right now I have a balance in my capital account of $103,775. I'm going to pick up my account number, which is 31, and I'm going to plug it right here to show that I have posted the capital account. Salaries expense is going to be credited for $3,575. So I'm going to go to my ledger. I'm going to go to salary expense. I'm going to put in my page number. I'm going to credit my salary expense for $35.75 so that I zero out this account balance. Remember, your expenses are closed, so at the end of the month, they should have zero balances in them. Pick up your 5-1. And I'm going to put that right here. Supplies expense will be closed out. Pick up your 5-2. And put it in your journal. I'm going to post to my rent expense account. Page number 4. Closing out the expense account, and I'm going to pick up 5.3. I'm going to go to my depreciation expense account. And I've zeroed out my depreciation expense account in my ledger. I'm going to pick up 5.4. And then I'm going to move to my insurance expense account. And I'm going to close it out. And I'm going to pick up the 5.5. And then I'm going to go to my last expense account, which is miscellaneous expense. And I'll pick up the 5.9. And I'll move to my second journal entry where I debited my capital. And I debited it for the amount of the drawing, which I believe was 18,000. I'm going to check that just to make sure I didn't forget. It was 18,000. And then I'm going to rebalance this account. Notice this is capital, it's permanent. It should have a remaining balance in there. What I'm going to do is I'm going to take my previous balance of 103,775 and I'm going to subtract out my debit for the drawing, and that's going to leave me with an ending balance in my capital account, which should equal the ending balance in our statement of owner's equity and the ending balance on our balance sheet. And it also should end up being the same thing as we calculated up above right here. And it does. All right, so the capital account number is 31. I'm not through with the posting process until I put that 31 in my post reference in my journal. Now I'm going to go to my drawing account and I'm going to zero it out because it was a temporary account. And I credited my drawing to get it to a zero balance here. And I'm going to pick up my 3.2 and I'm going to put that in the journal. So we're through posting our closing entries. All of our revenues, expenses, and drawing accounts should have zero balances. The remaining balances in your ledger are your permanent accounts, which also are equal to your balance sheet accounts. You have to put this ending balance of the remaining accounts in a post-closing trial balance. And so I've kind of made one up here for you. This is a post-closing trial balance. I'm starting with my cash account, which should have a debit balance. I'm going to put equals up here, and I'm going to go to my ledger. Go to your ledger and pick up the ending balance for cash. And that ending balance for cash was $43,535. And I'm going to do the same thing for accounts receivable. My next account in my ledger comes right after cash. So we're scrolling back up to the top. See, we got cash here. Now there's accounts receivable here. Scroll down and pick up that ending balance there. And then the prepaid insurance, I'm going to pick up the balance of it. Prepaid insurance is an asset account. And my prepaid insurance balance was $4,000. I'm going to pick up my prepaid rent balance. And I'm going to pick up my supplies balance. And all of these are asset accounts. They should have debit balances. When I get to my accumulated depreciation, well, I skipped equipment. So let me go to equipment. It's that asset account. It should also have a debit balance. So let's don't skip any of these. It's almost through here, class. The accumulated depreciation will have a credit balance. I'm going to move to my credit column. And you can see in your credit side here, there's the balance, 400. My accounts payable is a liability. It should also have a credit balance. There's the credit balance. I'm going to pick up the balance of my salaries and wages payable. It's actually just salary payable. So let me change the name on that to just salary payable. And then my unearned rent. It's a liability, and my capital account balance, my owner's equity account capital balance is a credit balance. Okay, and it looks like I might have a mistake here. And so hopefully that doesn't happen to you. There's a possibility that it could. One of the first things that I would do, so I'll just make sure that I've got everything summed right. Okay, and let me see what the difference is. Let me see here. I'm going to create me a formula here. And I'm going to subtract out this to see what the difference. The difference is 150. That could mean that I have a transposition error somewhere. Let me look at my salary expense account. That doesn't look quite right to me. $35.75. Should be $35.75. That wouldn't have affected the balance though, because that wouldn't have gone on the post-closing trial balance. It's just assets, liabilities, and owner's equity. So it's for $150. All right. What I'm going to do is I'm going to stop sharing this with you and let me see if I can find it so it won't waste your time. You'll have to wait on me. So I'm going to stop sharing this with you and then I'll come back and let you know what the problem was. Okay, class, I think I found it. So I'm going to see if I can show it to you. It was right here, and prepaid rent is not $4,000. Prepaid rent was $38.50, I believe. So let me check both of these because it looks like I put one in where it shouldn't have gone. And so that's what my mistake would have been. So I'm going to go back and look at prepaid rent first. Prepaid rent is $4,000, so that's correct. So my prepaid insurance is not correct. So I'm going to go to my prepaid insurance account. And I'm going to pick up $38.50. So what I did wrong, class, was I picked up the prepaid rent twice. And prepaid insurance obviously was $38.50. And that should have gone there. And it is balanced out now. So I know, class, that this is a very long problem, but it takes you through all the steps of the accounting cycle, which is so important for you to do. And it's important for you to know how to do, because the remaining chapters, you're going to need to know what the steps are, because the remaining chapters, we're just going to add to what you know from chapters 1 through 4. So hopefully giving this to you in small bits and pieces didn't overwhelm you, but you know this is a long problem. And so I tried to take it step by step with you. If you have any trouble at all, just let me know and I'll be happy to assist you any way that I can. Thank you for being so patient with me. I'm going to stop the recording now and we'll see you next time. Bye-bye.